Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's bearish sentiment since Tuesday continues to slide as we now look towards the last objective, which is at 73.40. We're getting somewhat oversold and therefore could see, I feel, the market to start taking profit towards this level. Also notice the 60-day moving average could actually display some hedge fund buying as well. Nevertheless, either way, we are oversold, and therefore I feel that we could see some profit taking because we have come pretty much a significant downturn since that bearish divergence kicked in earlier last week. Overall, reassess from 73.40 and see where the market leads from there. The euro is heading back to the lows for this year, seen around 1.15, 10.15. In light of the pattern, there's still plenty of room to actually head lower if we crack this level. We have to move to the broader picture, being the monthlies, and look at the next target, which is at 113.50.80. With the non-farm payrolls tonight, if we see a stronger number, could see the US dollar, which measures the greenback strength against a basket of 6 major currencies, and the euro weighted at 57.6, rally on beyond the recent highs around 94.55 and head towards its objective, which I'm still holding at around 95.30.50. Overall, though, let's see what the price action is into the non-farm payrolls, and if we do crack this level of 115, 10.15, then the next target, as I say, should be around that 113.50.80 area. The dollar yen still remaining somewhat sideways within the parameters of 113.20 to 114.70. With the technicals remaining weak, I do anticipate that we should eventually see this level crack and look down towards that 112 region and reassess from there. Sterling displayed one heavy candle after the Bank of England is most probably to some surprised that they kept interest rates on hold at 0.1%, 0.10% that is. And as you can see, the market's reached and gone further of the target of 135.55. I am now neutral. The reason being that the market's overshot its target and it could see an actual recovery from here, as the market most probably is a little bit short and therefore could see a retracement back towards that level of 135 to about 135.70. In light of the crack of the support level at 91.40, now opens the way down to 90.20, with in mind that we could actually even see a lows around 89.40. Nevertheless, the technicals are heavy, so let's see if this pattern continues. Gold rebounds in front of that level this week of 1,748, now looking back towards the top side. There's a bit of a yo-yo at the moment, but nevertheless, the market should find resistance still around that 1,800, 12.16 level, and likely to see a failure there due to the MACD being very weak in terms of supporting any bullish case. So no doubt we'll keep seeing this whipsaw manner, but if the dollar does increase, and also we see a stronger non-farm payrolls number, then no doubt we will see it return back towards that bottom side of that range, as I mentioned, around 1,748. Very whipsaw price action for oil overnight after OPEC kept their view of only reducing any supply to around 400,000 a barrel, I believe it was. Anyway, in light of this pattern, the market is a little bit mixed because I have to see how fundamentally out of the US now, whether they start dipping into their reserves. But from the pattern breaking near enough from this level of 78.70, then let's see if the market can continue on down to 74.80.90. Well, that wraps it for today. Thank you very much for joining me. Keep an eye on those non-farm payroll numbers out around 11:30, and I hope you have a great start to the weekend.